Continuing with the PMC bank crisis, Maharashtra is home to over 80,000 cooperative housing societies, and that is a conservative estimate. Almost all of them maintain accounts with cooperative banks. In the wake of the crisis at the Punjab and Maharashtra Cooperative Bank, these societies are now worried. Many have begun trying to move their accounts to nationalized banks, but CNBC TV 18's Yash Jain reports that this is no easy task. It comes with a mound of paperwork and, more importantly, a stiff financial implication.
The Reserve Bank of India's clampdown on Punjab and Maharashtra Cooperative Bank has hit cooperative housing societies the hardest. Most of them maintain accounts with cooperative banks and not nationalized banks. Now, however, fears of the PMC crisis being replicated at other cooperative banks has these societies scrambling to shift accounts to nationalized banks.
Cooperative sector has to promote cooperative banks. Section 70 of the Maharashtra Cooperative Societies Act stipulates that money of a cooperative society has to be invested in cooperative bank.
This is not the first time that a cooperative bank has fallen prey to financial irregularity. Similar instances have taken place at Madhavpura Mercantile Cooperative Bank, Maharashtra State Cooperative Bank, Krushi Cooperative Urban Bank, and Nagpur District Central Cooperative Bank, to name a few. In the wake of these, the state government had amended the law in 2017 to allow cooperative housing societies to open accounts with nationalized banks. But societies did not move their accounts because of lack of awareness. For accounts with PMC Bank, the immediate problem with such a transfer is that money cannot be accessed in question till RBI allows it. But irrespective of which cooperative bank the account lies with, the fact is that a move to a nationalized bank will mean stiff financial ramifications. For one, by maintaining an account with a cooperative bank, the housing society received a sizable tax break from the government, an income tax waiver. So, if the account is now moved to a nationalized bank, the society will have to pay 30% income tax. The other, though relatively smaller financial burden, is comparatively higher charges and fees a nationalized bank levies on account holders.
Now people will become smarter. They won't invest money in one bank. They will spread over that money in different banks, which banks are fundamentally strong. Up till now they were seeing convenience, which is the bank near their society's place, and they used to save on time. But now the focus will be to save on money, have it properly rationalized and utilized.
Now the finance minister has assured PMC Bank's depositors that she will take the bank's problems up with the RBI, and the government will also look at changing laws and policies to make it safer for all cooperative bank account holders.
If amendments are going to help us curb malpractices, if amendments are going to help us in better regulating them, in better empowering the regulator himself, that is the RBI, we like to do it. So, the meeting and the group which will be looking into this, being chaired by the two secretaries of the Ministry of Finance, will also have one of the deputy governor level official from the Reserve Bank participating in it, that if necessary in the forthcoming winter session of the Parliament itself, we'll be bringing in any regulation, any amendments which may be necessitated.
But these measures will not come in overnight. And in the meantime, experts say the exodus to nationalized banks may not abate. Such an exodus may not be restricted to just Maharashtra. After all, there are 1,500 odd urban cooperative banks across India, which together handle total deposits of over 4.5 lakh crore rupees. In Mumbai, Yash Jain.